Hello everyone, my name is Erik Miller and I'm a passionate mortgage expert, and this is Mortgage in a Minute. If you want to win it, Mortgage in a Minute.
If you really want to win it,
Mortgage in a Minute! Hello there and thank you for checking us out. If this is the first time visiting the channel, thank you. I hope that you will like and subscribe and do what all the kids do these days, which is to complain about things and live with their parents. I'm just kidding. Like and subscribe is what I meant. Anyway, welcome to Mortgage in a Minute. For those of you who don't know, this is the low frills video series that gives you great home mortgage, finance, and real estate information under the pressure of a countdown clock. Everyone knows that buying a home is one of the pathways to prosperity. Buy if you want or don't. But I've personally seen people rise in prosperity and happiness as a direct result of buying a home, so I'm a huge fan. The home is the biggest purchase in most people's lives, and I hope that we'll be able to share some information today and on the channel that is helpful to you. So, if you're looking for the kind of I can't believe it's not butter level of mortgage information, but you've only got around a minute of time available, you've come to the right place and you're watching the right video. Today we're specifically going to talk about a very specific topic related to mortgage, and that is mortgage income types. Okay. I know you're like, finally, someone's going to talk about the different types of mortgage income. Woo! I know this might sound boring, but actually it's a really important topic because ultimately it impacts your ability to buy the home you want or get in the area you want. And that does make a huge difference. Bottom line, you work hard, and if you want to buy a home, you should get the max of whatever it is that you're going for. And knowing this information can make a difference. So here goes. As always, I'm going to be fighting a countdown clock to get as much of this information as I can possibly cram into the allowable time of 1 minute and 59 seconds. If I make the timer, I can give you bonus footage. And in this case, the bonus is bananas good. So fingers crossed. Clock, please. All right. Stage is set. You know the rules. Glasses are adjusted. Once again, the topic is mortgage information, types, and documentation required. Ready? Go. Okay. Income is one of the big requirements when buying a home, and for obvious reasons. At the most basic level, the investor wants to know that you have the ability to repay over time because that's the agreement that you're making with them. As such, income is obviously critical. Even though it's all earnings, there are several different types of income, and how those numbers are actually calculated will change based on the type. Sometimes this topic can get highly specific, but given the time restrictions, I'm only going to keep it to the basics for now. Type 1, W-2 income. This is where you work at a normal job that pays you a salary or hourly. You'll need to get 30 days pay stubs and have a 2-year history in the same field to count everything. Don't worry about the same field thing too much. It's usually pretty easy to establish. Okay, as you might imagine, this form of income is pretty straightforward, but where it gets complicated is if you have overtime or bonuses. In most cases, to count the bonuses or overtime income, you'll have to prove that you've been receiving them for 2 years or greater. Not the same employer, but just receiving them in general, and they have to be reflected on your tax returns. And it needs to show that it will continue. Okay, type 2, retirement income. This can be typically a pension, Social Security, or if you have some kind of annuity. You're going to want, in this case, to get a pension or Social Security award letter and have a 2-month bank statement history showing the direct deposit. This takes place in the pay stubs. All you have to do here is pretty much make sure that you can show a 36-month continuance after the loan closing or a pay forever in case of a pension, and then you'll be fine. Type 3, investment and rental income. This is also pretty easy. All you need to show is how much the distribution or rental income is on the investment side, and that you'll have to prove that it will continue at least for 36 months, or on the rental property that you've got a lease and you've got deposit statements proving the rent is being paid. Type 4, self-employment income. This one can get really complicated because there are a variety of business structures. For example, you may have to set up a pass-through LLC, which you would definitely need among other things. God. Man, there's really too much. I really thought I had this one. If you have any questions about income calculation or loan requirements, I hope that you will